Okay, so as you guys know, the reason why we're here is to ask an expert on life insurance. And the reason why I decided to hold this seminar is because, online I'm seeing so many people with their ideas on what life insurance is and what products you should be getting. And some of the things that they are saying is false. It is not true. Some of the things that they are saying will land you in jail. Okay, guys. So
Um,
I'm here
I,
to clear up all the misconceptions about life insurance and also to help you navigate what you should be doing and how to get life insurance and all that other good stuff. So I wanted to hold this seminar in a question and answer type of way. And as we go along, I will elaborate on some of the points or some of the questions that you guys are asking. So who has a question for me? Nobody?
I guess just what's the difference in the various ones? I have whole life, so I mean, yeah, whole life
Yeah.
insurance. So just wanting to know the difference in each one and how can each one benefit us so we can, have a better understanding on how to choose.
Yes. So you did a good job with whole life. Whole life is like the king of insurances. That's what I call whole life king. And the reason why is because as you know, whole life has um a savings component attached to the policy. So this way you're able to have a life insurance policy and also save money on the back end. And you can utilize that money later on in life. You can borrow it. Some people even use their whole life policies as a bank. And that's something that we also should talk about, how to use your whole life policies as a bank, because I see a lot of misconceptions about how to utilize whole life as a bank out there. But anywho, so whole life serves so many purposes. You have an investment component to it, and also you're getting life insurance just in case something happens to you. So, which is a great thing. And Val, there are so many other different life insurance policies out there. You have term life, whole life, universal life, index universal life, which is now becoming so popular out there in the YouTube streets and also the TikTok streets.
Uh,
Um, so many different types of insurance. It's overwhelming. You can actually have an insurance policy to kind of like fit your lifestyle, whatever your lifestyle is, how much you can afford, you can doctor your policy to reflect that.
okay.
Yeah. So whole life is king. The next policy over, I would say, is term life. Term life is temporary. It only lasts for a specific period of time. So most people, they take out like a 30-year term because it lasts for 30 years. The price is set at 30 years. It doesn't go up or down. The drawback to term life is that it does expire. You can choose to extend it, but if you do like renew it at the expiration, you will be 30 years older. So they will renew it at the age you will be. So if you take a 40-year-old person and they get like a 30-year term and they're only paying about, I don't know, $25 a month. By the time that 30-year term expires and they're now 70 years old, they won't be paying $25 a month, okay? They may be paying like a couple $100 a month because
Wow.
now they're close to their expiration date in life. Oh, I hate to say that, but it is what it is. It's an expiration date in life. So,
Yes.
yeah. So,
I have
uh,
a,
mhm.
I have a question. So regarding on term life, let's say someone has had a term life in the company that they work with. I'm assuming that if, correct me if I'm wrong, it's not transferable, let's say when they retire to have it renewed with them instead of the company, or how could that possibly be done?
in most cases, and I'll say 75% of the cases, it's not transferable. Once you leave your employment or you retire in any way, that term life policy expires, or it just terminates. It terminates with your employment. There are a few cases where you can get a term policy with your employer and you're able to switch it out once you leave employment. I've worked with insurance brokers all my, for most of my career. And I have policies that I took out when I was employed with them. So, and they're still active now. So, I mean, and they allowed that to happen. But in most cases, most employers do not allow that. You go, your policies go too.
That happened to me.
Yeah. It's sad, but they should allow people to take the policies, with them as they go to continue. But that's part of some of the enslavement with being employable. They bait you in with life insurance and all those the great benefits. But once you leave them, you don't get those benefits anymore.
Exactly.
Yeah,
Thank you.
you're welcome. And what else do you guys want to discuss? Do you want to discuss? Oh, so we talked about whole life. We talked about term. And let's talk about universal life, because there are so many different types of universal life policies out there. Okay. The main universal life policy that I deal with, that I love, is called a guaranteed universal life, guaranteed issue universal life. And so what that policy does, it gives you life insurance, but you don't have the investment component on the back of it. So it just gives you straight up life insurance all the way until you're 121 years old. And the price stays the same. It doesn't go up. It doesn't fluctuate. So if you take out a $100,000 policy and say, for instance, you're 35, you could be paying like $34 a month. That's it. And you'll still be paying that amount when you're old and gray, because that policy never goes up. It's a flat policy. And I know this sounds kind of crazy, but a lot of my friends who have thugged out kids, the kids out there in them streets, okay, they take out a universal life policy on them, because they're looking for a policy that, just some type of insurance policy on their kids, because they know their kids may not survive because they're out there doing things that are not good, are not savory. So they take out those policies. And, they keep those policies forever until whenever. But it's a good policy to have. There's no savings component on it, but it is very cheap. That's another reason why I love the guarantee issue universal life policies, because if you're looking for life insurance and you don't have a lot of money, that is the best policy to go with. It's almost like having a long-term term policy that expires when you're 121 years old. So it's just a good policy. I love guarantee issue universal life. Then the next universal life policy that is so popular that got everybody buzzing is the index universal life policy. Now, I see so many of these TikTokers, YouTubers out here, and they're just saying, oh, you take this policy, it'll grow, and then you just take the cash value out, and you can do this, that, and the third. That is so not true. Because you have to have accumulated cash value in the policy in order to utilize it for whatever you want to utilize it for. Some people are saying, oh, you could take the face amount. The insurance carriers are not stupid. They're not going to give you the face amount of a policy. If your face amount is $1 million, you think the insurance carrier is just going to give you $1 million so you can play with? And they thinking that you're going to pay them back? No, it doesn't work like that. It works with accumulation. You have to accumulate the cash value in the policy first before you can take it out. Now, I love and I hate universal life. I love it because it's a great tool if you're a parent to save for your kids' college fund, because you can save within a 10 to 15 year span and accumulate a lot of money. I hate it because it fluctuates and the money is not guaranteed to be there. So you have to really vet what type of universal life policy or company you're going to go with, and see which one has a really good long standing and that does pay out the benefits when the time comes for you to pull that money out. You'll be shocked. A lot of universal life policy people, they bait you in saying, oh, you're going to make X amount of dollars when this policy, at year 20. And then when you go in there, you don't have but $2 sitting there. It is horrible. And they do not tell people that. The money is just not guaranteed. I prefer whole life over universal life. Whole life is a little bit slow because how the money grows in a whole life is contingent upon slow growth investments. How the money grow in universal life, the index universal life, is contingent upon the S&P 500. So according to how the market will perform, will be determined by how your universal life performs inside the policy and how much money you can gain inside the policy. It's oh goodness. Yeah, the index universal life is it has its positive and negatives. Another thing about the index universal life policy that a lot of people do not tell you about is that over a period of time, say for instance, you do not want to touch the money in your policy and you want to grow old with it. If you do not touch that money at a certain period of time, I'll say about 30 years, then the money starts to dissipate in the policy. It starts to evaporate, disappear. Over time, you'll see the cash value that you have sitting inside the policy, it just goes away. And this is without you taking the cash value out, without you utilizing the cash value, it just goes away. That's another reason why I do not like the index universal life policies. And this is something that people are not talking about either. I prefer whole life because with whole life, the money's almost guaranteed to be there. Even after you're 30, 40, 50, if you don't touch it. And the great thing about whole life is if you do not touch it, the fatter it will grow. It just will keep growing and expanding for you. It's just a great product to have. The next policy in that universal life realm is the variable universal life policy. And basically with variable life, it just gives you the option to pay as much premium as you want. So if you want to pay a little bit of money this year because, or this month because you're having financial issues, variable life will give you that option. And then if you want to pay more money the next month because you want to increase your cash flow inside the policy, variable life is the way to go. I do not like variable life either because again, it is contingent upon the S&P 500 and however the stocks perform is how your policy will perform inside. And you just, with me, I'm just like one of these people. It's all about your personality. I like safety. Okay. I like a safety net. Okay. But there are people out there who do not like safety nets. They like to go gung ho. They like to live on the edge. Okay. So they will get that universal life policy or the index UL or the variable life policies. Did I answer that? James, you have a question?
Yes, I have a question. Good morning.
Good morning. How are you?
I'm good, and you?
Good, doing
And
well.
everybody else, hope you're well too.
Yes.
So I got a question about all this, right? I got a couple of questions. I'll start with a basic one. When should I get life insurance? I know that seems like a stupid question, but when should
It's
I
not
get
a
it?
stupid question. No, it's not. No, you should get life insurance as soon as you leave your mama's womb. And I always tell people that. I
Mhm,
think, no, I really think that parents could set their children up with a great life policy. By the time their children
mhm,
turn like 30 or 40, they'll have a significant amount of money sitting inside the policy that their children can live off of. They can invest, give their children the gift of investment through a nice life insurance policy. But if you are older, you should really start looking at life insurance as soon as possible. I have a lot of people who are single with no children, no family, and they're like, Miss Spivey, should I get a life insurance policy? And I'm like, yeah, let's see what your options are. What do you want to do? And most of my single people with no children, they'll opt to get either a whole life, or some of them get a guaranteed universal life too. But most of them get a whole life because they want that, they want another savings mechanism or another income type of investment for their futures. So they'll get a whole life policy.
So that's what I've always been confused about with insurance. I thought insurance was like car insurance, where unless you need it, you're not going to be able to use it or something. How can I translate money I'm investing in insurance as money I can draw off of, right?
Yeah.
Because people are trying to get me to be a broker right now, and I
Mhm.
don't understand the correlation between being a broker and having money to use for investing or whatever. Can you explain that, or is that too much?
No, it's of course not. No. So think of it as this way. When you get a life insurance policy, okay,
Mm.
it's almost like having a savings account. It's like you opened a savings account. That's what it is. All right. And on the back end of your, so for instance, say for instance, you get $100,000 policy. That's the face amount of the policy. And as you put your premiums in, say for instance, you're paying like $100 a month towards the premiums. As you're putting the premiums in, the premium is being collected on the back end of the policy. The insurance carrier on your behalf is taking your money and investing the money for you. Okay. So they give you a reward back for allowing them to use your money through the form of dividends. They'll pay you dividends every year on your money. Right now, we're illustrating the dividends at 4.5%, but what people are actually making is like 7.5% to 8% on their money. This is with a whole life policy. On universal, the index universal life policy, it is a lot higher, which is why it is so attractive to people. They love that 10%, 11%, sometimes 15%. One time it went up to 17% one year. It was crazy. A lot of people are making so much money in their life policies. Okay. But as you know, as things get caught on, people start utilizing life more. The system, the people to be, the powers that be start changing the rules. Okay. So that's why the interest rate has not hit 17% in a long ass time. Okay. They just don't want people, people are hip now and they don't want people getting rich to that. But
Right.
to answer your question, yes, the money, it's like being in, how can I say? It's like having a 401k plan or a Roth IRA. You put the money in, but it's a life insurance policy, and the money's growing on the back end. Okay. And it's accumulating on the back end. And it's also dividends are being thrown in there. And the dividends that are being thrown in there, it's collecting more dividends on top of that. So it's like a compounded interest type of policy. It just keeps growing and growing and growing. And you can
So
only use the money that is in there. That's what I want to tell people. So say for instance, in 5 years, you saved up $10,000 in your policy. That is all you can take out is $10,000. Okay. You can't take out anymore.
when you say take out 10, so if I save $10,000 over 5 years, I can go get that $10,000 and do something with it?
Yes, it's your money. So with some policies,
Really?
oh yeah. So with some policies, they'll allow you to utilize it. This is when people start talking about utilizing your policy as a bank. Okay, I even utilized my policy as a bank one time, y'all. Okay. One time I needed some, I was struggling. I needed some money. And I couldn't go to a bank because I don't have a traditional job, as you guys know. And I didn't want to ask friends or family. And my life insurance statement came in, and I saw that I had a few $1,000s sitting there. And I'm like, what? I called them up and they cut a check. And over time for me, because I'm like the financial, person, I put the money back in there because I want my policy to continue to grow over the years. Okay. You have the option to take the money, or you have the option to what they call surrender the policy. That's when you take all the money out and you close out the policy. Or you have the option to borrow the money against yourself. You can actually borrow that money. The insurance carrier will charge you a little bit of an interest fee. It's not high. That interest money sometimes go back to you. Actually, it doesn't go to the insurance carrier. It goes back to you because it's your money. You're borrowing your own money. So it allows your money to grow even fatter over a period of time, as long as you pay it back, though. As long as you pay it back. And the great thing about it, James, is that those policies, the face amount will still stay the same in most cases. In most cases. I know with whole life, the face amount still stays the same if you take all the money out. As long as you continue to pay your premium, as long as your policy is still active, you can still have a life insurance policy. So if you pass away, your beneficiaries will still get that $100,000 policy that you took out. They'll get the $100,000. And in some cases, say for instance, you don't utilize your money in the policy and you pass away, your beneficiaries not only get the face amount of $100,000, but they'll get a portion of a substantial amount of the savings that you have on the back end of the policy too. So the death benefit increased on that policy.
So that $10,000, that what type of insurance would I get to? I'm trying to make what's the best policy for me if I want to have, hypothetically $10,000 available? How much money would I have paid out or given to the company to get that $10,000? Like, what are the fees? What's the cost?
Right. So there really isn't no cost per se. I will say this, and I'm going to be upfront and honest with you guys. The first year that you pay your policy, you do not gain any cash at all. At all. It's zero. And the reason why is because the insurance carrier has to make money. They got to pay me, the broker. They got to pay the administrative staff, and they got to pay other people, for just establishing the policy. As year 2 comes along, you will see that the money starts to grow. Now, there are some whole life policies, and I call them the fast growth policies, where you can start to accumulate money on that first year. There are some. They're becoming very popular, but they are aggressive and they cost a lot of money. Okay. The more money you put in, the more money you get out of your whole life policy. So in your case, James, I can't really say so much how much you're going to put in to get that 10,000 and how long it's going to take. I will have to run an illustration for you in order to give you a hypothetical, illustration on how the policy can work for you, how much money you can save over a period of time, and what to expect from it. So after this, we can look at some illustrations for you.
Okay. So another question, I found out of my 401k, my Roth IRA, I can take a disbursement with no taxes at 59 and a half years. Is there anything like that when it comes to insurance? I mean, is there anything where you can take and not get charged any fees or anything at a certain point?
Yeah, so that's the beauty part of life insurance, which is why it's also becoming popular that people are using life insurance as a either a second vehicle to their 401k plans or as a just a replacement to their 401ks. The reason why, you don't have to wait. Okay, you got your money sitting there, you can borrow it, you can take it, you can draw on it a year. If you have not enough significant amount of money sitting there, you can draw on it every year to support your lifestyle. Okay, you do not have to wait like a 401k or a Roth IRA until you're 59 and a half. You can do it at any time as long as you have your money sitting in there. And there are no penalties. You're not going to be charged any fees.
That's cool. And you mentioned one or two I've never heard of before, this index insurance and all that. I don't hear about this stuff because, the assumption when you got a job, they just say, here's insurance. You can, life insurance, basically. They don't break it down to different types. So that was interesting to hear that. That's something I've never heard of before. So
also just to keep in mind, of course, you're welcome. Keep in mind with jobs, they only offer their employees term insurance. They don't think of you guys as a long-term investment. You know, they're not invested in their employees. They only give you term insurance. I lucked up and got a whole life through my job because, again, I was working for a broker. So they, they give us everything. When you work for these brokerage houses, we're already in the insurance industry. But in some instances, when you're working for other people, they only give you term. That is it. And those terms will expire once you leave your employment there. Yeah.
Makes sense.
Mm-hmm.
So how much life insurance should I get? I mean, what's the number, the magic number, and the possible cost, I guess, monthly, if you could throw
I
something
can't
out
really
like
give you a possible cost. I can't do. I'm not going to do that to myself because you'll be shy. It's different for everyone. It's according to the age, your health, where you live. A lot of things go into um the amount of insurance you're going to take out, and also the face amount, how much insurance you need. So just to address your first question, how much insurance do you need? Most people take they take their salary and multiply it by 10, and that usually gives them the amount of life insurance that they need. So for
that? Okay.
instance, you make 100,000 a year. Okay, 100,000 times 10 is what? Gosh, a million? No, what is it?
Million or 10
10
million?
million. It's 10 million. It's 10 million. So you probably would get a $10 million. Wait, is it? That is sick, y'all. Please hold on. You know, I'm a little dense.
I'm feeling 10 million, but I don't do math, but I'm glad you used 100. That should make it easy.
Octavian, where are you?
I'm here. What's
No.
up?
Okay, wait. Okay, it's actually a million. Why did I think it was 10 million? That is so
I thought it was
crazy.
10 too. You
Well,
know,
Okay.
in the
but it's
future, we might talk about that, but not the moment.
Oh, okay. I'm sorry. Because you're young and fast, and you can like think real quick. But it is $1 million. So, but I do suggest that, you probably, if you can get more, you get more. So a lot of people, they can't afford $1 million policy if it's a whole life or a universal life. They can't afford it. It's expensive.
Mhm.
Okay.
well, would expensive be a monthly rate? Because for $1 million, like just based on those numbers, what would it be like? $20 a month, $100 a month? I'm
No.
just looking for that.
Close.
So it all depends. If you have a term policy, okay, and you're 20 years old, $1 million policy will cost you like $15 a month.
Oh, it's by age. So
It's
if you're
by
about to
age.
die, then it'll cost like $1,000. Got it.
Exactly. The older you are, the more the life insurance is going to cost. And of course, you can't get life insurance past a certain age either.
But if you produce some type of health information, like show your physical that you're not dying or whatever,
It
doesn't
doesn't
that affect
matter.
numbers?
I mean, of
It
course,
doesn't?
you will get what is called a preferred rating if you are in great health. Okay. But they are going to, it doesn't care. It's all about your age. That is really
Gotcha.
the biggest determinant factor on how much your life insurance will cost. Yeah.
Got you.
Yeah. And then health is the next determinant factor. I mean, if your health is compromised in any type of way, the life insurance is going to cost you more. Yeah, because
Got
you're
you. But still,
more of a bigger risk factor.
age is the biggest determinant, though,
It
from what you're
is.
saying.
Yeah,
That
because
that's something.
if you're a 50-year-old man, you can pay $80 versus a 20-year-old man who's only going to pay $15 for a $1 million policy. And
Got it.
it's only a term policy. Okay. When we get into the whole life and the universal life, it's a whole different ball game. Now we're talking hundreds of dollars a month. And in some cases, if you're 50 and you try to get like $1 million insurance policy, whole life or universal life, it's going to cost you at least close to $1,000, if not more, a month. Because that's a $1 million policy. Remember, it's an investment at that. It's an investment.
Yeah, I'm seeing it all in a different light, using the word investment versus just insurance in case, for the next generation. I see insurance as generational wealth, not so much wealth for me. I've never seen it as wealth for me, and that's just interesting. to discuss this. So
Yeah,
I like the conversation.
insurance is the fastest way to give wealth down to your descendants. Is the fastest way and the easiest way, because all you have to do is pay your premium and die, and they'll
And,
get and they'll be
and
rich.
word on the street is that's how the Rothschilds became rich. They just kept passing on that wealth. When people passed, they just put it in some kind of,
I
you
trust.
know, trust. Yeah. And
Yeah,
they
they
just
do
get
have
paid.
a big trust, and everybody is just in that trust, and the money's
Yeah.
just circulating in that trust. That trust guy, the trust alone gains so much money a month in dividends and everything that they don't ever have to work again.
Ever.
And the money just keeps
Ever.
going down in that. It's sick how they set that up. They were genius.
It,
They were,
if families could do that, they would never be broke again. But there's so much selfishness. But that's another story. So
yeah, it's
yeah.
a lot of selfishness. The Rockefellers, they made sure that they took care of their family for generations because they had a mission, so yeah.
But
Octavian,
thank you.
you're welcome. You're welcome. Octavian, you was gonna say something?
Oh no, just listening to everything there. As the gentleman mentioned, like yeah, intergenerational wealth mindset makes a big difference versus a lot of people coming from, as they say, nothing or humble beginnings. And when it comes to whole life, yeah, I'm all for whole life. As you know, we've talked about this many times. Wanting to pass on generational wealth because what's expensive today, as people say, is going to be even more expensive tomorrow, and we have
Right.
to have that mindset, especially since um, many people don't come from the background of understanding what insurance is or in general, and that has to change. Otherwise, we're going back to square one, where coming from nothing is still going to be a legacy moving forward.
Correct. Exactly. Yeah, exactly. But I'm telling you, insurance are like, even if you're young, and we're talking about, money and getting rich or whatever from insurance, even if you're young, and this is a good way for young people to establish their futures is through life insurance. They can start, and because they're so young, their policies are so cheap. They don't realize that they're so young. They're just thinking about, oh, it's $100. I can't afford it. But yet they're eating $100 worth of McDonald's and Chipotle every week. Okay, make that make sense. Take that money and invest it in yourself, and you will not be disappointed at all. Ever, ever. The younger you are, the better it is. Now, I
Yep.
keep talking about the young, but let's talk about the older people, okay? Because I'm up there with them. All right. All right. Now, when you get older, of course, getting life insurance, it starts to get a little bit tricky. All right. Because you don't have a lot of time to save and accumulate a lot of money in your policy, especially like if you're at that 50-year-old range. Um, you really only got like a 20-year period. And then in 20 years, you'll be 70. You have to look at your future and think, am I going to be healthy and vibrant enough to enjoy this money once it's saved? Um, so there are a lot of things things to consider. And also, as you get older, if you did set up your life a certain type of way and your funds are limited, it's really going to be hard for you to get a life insurance policy that is going to really give you um, a great savings mechanism. At that point, what I do see, a lot of my older clients, they do opt to get a guaranteed universal life policy. That's the policies I told you guys about earlier, where it's a straight policy that runs until you're 121 years old. Or they'll get what is called those end of life policies. And let me just explain those end of life policies, because I know on television we see Colonial Penn and all these other places. Um, for 2 cents a day, you can have a life insurance policy. What they don't tell you is this: for 2 cents a day, the face amount on your policy is only going to be like $4,000. That's it. Okay. So yeah, it's 2 cents a day. You're only paying $10.99 a month, but the benefits is only 4,000. What can you do? Average funeral is $18,000 right now. That's not enough to bury you with. All right. It just, I guess you can get cremated with it if that's what you so desire to do. And that's fine, get cremated. But if you want to leave your beneficiary something, those policies will not work. Another thing about those policies is you have to be alive for 2 years when you take out that policy. If you're like really sick and you're trying to like hold on and you take out that policy, if you pass away during those 2 years, your beneficiaries are not going to get anything. They'll just get the money you put into the policy. They'll get that back. So if you invested like $500 in a policy, they'll get that. But if you pass away, they are not going to get the face amount of the policy. So those policies, they're good for people who really do need life insurance at the last minute. But then again, those policies are they're expensive. This is why I always tell people, like, try to get them when they're young, at least before the age of 50, I would say, because after 50, I'm going to be honest, life insurance gets very, very expensive. It starts to get, I mean, if you're fine and you can afford it, fine. But there are a lot of people out there who just can't afford it. And so it becomes unaffordable for them. So get it while you're young. And some people, this is another question I get asked. Do I need life insurance if I have so much money? Because, there's a lot of people who have all this money, blah, blah, blah. And the answer is yes and no. Okay. Sometimes people don't need life insurance. I know a guy who I'm friends with. He has a lot of money just sitting in investments and things like that. And he said, if I pass away, my kids can just go in and take the money out of my account and bury me with, which is true. And in his case, he doesn't want it. He doesn't need it. That's his choice. He don't need it. He don't need to have it. But then there are people who they do have millions of dollars, and I deal with them too. Okay. These people make millions a year, and yet they still get $1 million policies. And the reason why is because they're protecting their assets. It's a great way to protect your assets and also to pass down a little bit of extra money down to your beneficiaries if you choose to do so. So life insurance is used, for so many different reasons, a bevy of reasons. So do you guys have any other questions? I know y'all have some more questions. Valerie, you got a question?
No, you correctly answered them.
You did. James, you got more questions?
They're more of a personal nature, but like I said, somebody is trying to turn me into a broker. I went and took that little test and I failed it because I just tried to do it off off the hip. But
Was it
now
an
they're trying to
insurance
get me back.
broker or like because did you go to insurance school for it?
No. I just studied questions and I prepped that way. But they're trying to get me to be a broker for their company or whatever. And honestly, I was going to talk to you about that because I want to make sure I'm doing the right thing. Is for me, not to make somebody else rich and all that other kind of stuff. But what's that all about? Why the pressure to become a broker from somebody?
Yeah. So they're probably part of some type of Ponzi scheme. I know a lot of these. What brokerage was it? Was it the
I don't think it's a Ponzi, but the
Primerica?
same. No, it's not Primerica. I've dealt with them in the past, and I walked away.
Okay.
Hold on. It starts with a W, I think. I want to say Wentworth or something, but that's not right. I'll tell you in 1 second. But I just don't feel like it's WFG. You ever heard of that?
Yeah, I heard of WFG. They're still part of Primerica. They're under that same umbrella.
World Financial Group. That's
Yeah.
who they are. Yeah.
They're still part of Primerica. It's all under the same umbrella.
See, I didn't know, and that speaks volumes because I haven't heard a mention of that in any way, shape, or form. So I'm always skeptical because then they said they had to break off and form their own little sub company or whatever, and I'm like, why? What's changed? What's the big deal? It's like they're pushing off responsibility or whatever in case something goes south. That's what it feels like
No,
to
it
me.
doesn't. It's not that. So it's just that when they bring people underneath them, they just make more money. That's what it is. So it's like they're making passive income, or they're making income off of you. So how it works is this. You go, because I mean, so many people, and I've been licensed for 27 years, y'all. Okay. My sister been licensed for 27 years. I've been in them streets. And so over the years, I've seen a lot of these things happen. They'll take you, they'll put you in a room. They'll tell you that they want you, like you can make over $100,000 a month. Okay. They lie to you. They give you these overinflated numbers on how much money you're going to make a month. And to Black people, because we're so marginalized in a lot of ways, when we hear $100,000 a month from somebody, our ears are perked up. Okay. But then
Too good to
again,
be
I
true.
want you to
No,
really
okay.
think about that. What do you have to do for that
Right.
$100,000 a month? Okay. So
There
how
is-
they make money, you said something, Octavian?
I said, there is no free lunch, that there's always a cost to it, and that's why it's very important to do due diligence on what someone's introducing to you, especially if it's a sales tax.
Yeah, I agree. Hey, Jamila, can you please mute yourself, sis?
Yeah,
I
I'm
agree.
I mean, I'll support people. Like if you called me and said, James, blah blah blah, and if it's like $100, I'm supporting the cause. I'll do it just because I'm here to support you. But now when you're trying to bring me in and use me as an asset, I'm just not feeling it. You know, if it's not something I would do myself personally, I'm not doing it. You
Right.
know, and that's where I'm at right now. And they still want me to pass this test. But even if I pass the test, I would honestly go to you and say, Yolanda, how can I help you being a broker? How
You
can I
better.
help you? You know, you follow what I'm saying though? I
No,
would
I
come to you
understand.
before I
Yeah.
go to somebody else. Even
Yeah.
if I go and pass this test, because I've already paid $150 maybe to support the cause, but
Mhm.
I'm not feeling it. But I'll pass a test and say, Yolanda, I'm this. What can I do for you? You know,
And
does
don't
that make sense?
think that by passing the test is going to be some type of benefit. The next step is that they're going to want you to go out there and sell insurance to
Right.
everybody. See, this is
I'm not
dangerous
doing it.
because a lot of these people from the WFG group and Primerica, they're selling products that they can only sell. They really do not know the intricate details about life insurance. So they don't know what they're talking about. They're only trained on specific products that they can sell to people, and that's all they can give you. And that's very dangerous in a sense because they could be giving people the wrong product for their lifestyle. Whereas I'm a total independent broker. I have my agency now for 14 years. So what I do, we deal with over 200 life insurance companies. That's a lot. Okay. We have a policy for everybody. Everybody. If you are suffering from cancer, AIDS, whatever, we have a policy for you. So with those people, if they see that you do have cancer, they just going to write you, oh, I can't. No, you should be able to service each and every person that comes to you and understand their specific need and present a product to them that they can have for their lives. Now, with the Primerica people, again, they only give you a specific amount of products that they only have. They cannot really give you a well-versed scope of what type of insurances you may need. All right. And so what they do is they sell you a policy, but then they want you to go out after they sell you this policy. They want you to turn around and start selling policies. It is just too much. It's like almost like a Ponzi scheme. They want to just draw more people in. And another thing is the commission structure. Brokers should be able to make their money. With them, they take a large portion of your commission and they keep it. Okay.
Yeah, just want to share something about the insurance situation here in the Philippines, because I know it's totally different in the US, but in the Philippines,
Yeah.
I noticed that most of the financial advisors, we call it financial advisors, not brokers. So most of the financial advisors are making money in like a Ponzi scheme where they would recruit people under them and
Yes.
they would give them like a quota. So for example, in a month, you're required to have like 5 policies in. If you don't have 5 policies in, then you wouldn't get your commission.
Correct.
And the commission goes higher as there are more people joining below you. That's how they do it here.
Yeah. Yeah,
And it's really dangerous because they're only focused on getting more and more and more people to, buy the policies without even learning how the policy would help the client. So
that's the
it's really
same
dangerous.
exact thing. It is dangerous, Eddie. This is why I do not promote those type of life insurance companies. Like, well, they're not really life insurance companies. They are actually brokers, so to speak, brokers, just like me. But the difference is they're trying to recruit more people just to sell their products. And that is so dangerous to do because, say for instance, you're not a good salesperson. Not everybody's a good salesperson. Not everybody can sell anything to anybody. I'm not a good salesperson, to be honest with you. I'm not. Well, I'm not. I just know my shit. That's it. That's it.
I'm so
I don't know. I'm not. I don't go out and be like, oh, can you buy? No, I never ever solicit. People come to me because they trust me. I'm not going to steer you wrong ever. And that's just the bottom line.
I'll hustle if I have to get ahead. But once I pass that stage in my life where I don't have to hustle, I don't want to sell a damn thing.
And that's another
It
thing, James. I'm happy you said that, hustle, because that's basically what those people are doing from Prime America and those other places. They are hustling. And you do not hustle somebody a financial product. This is something very serious. Okay. These are people's lives. This is their money too. You do not hustle people. This is why if you can't be honest, loving, and open in this type of industry, this industry is not for you. This is why
yeah, I
I
don't
do
like being
not recruit
pressured.
people. I do not recruit. There are people who come along, they're like, Yolanda, can I sell under your agency? And I'm like, yes, you can. And you'll get all your commissions. I take none. I don't want your money. I want you to succeed. I want you to do well. That's it.
Sounds good.
Question, Yolanda, are you familiar with Northwestern Mutual by any chance?
Yes.
Okay, so you probably have heard from them and then other insurance companies related with them. Many years back, I was trying, I was an undergrad, so I was looking for experience and opportunities.
Yes.
And and this is a tactic that I learned from my mentor onto this and realized on how unethical it was. So what they'll do, they'll have you try to act as if you're a financial advisor, trying to get referrals and deals from your friends and family.
Yep.
However, that doesn't guarantee that you're going to get the job. And if you do that, you basically did work for them for free. Is that very common in the the insurance industry?
Yes, it is. Yes. So one time, Octavian, I had a friend. She thought I wasn't doing nothing with my life, and I actually just opened up my agency, and she took me to one of those Prime America meetings. I didn't know where we were going, and
Mm,
and the guy was like, "Oh, this is like for insurance services." And I said, okay. And now I did not tell them I was a licensed broker. I did not tell them that. I just wanted to see what it was all about, right?
right.
Do you know this fool got me in the room and said, I want you on our team. We'll get you licensed. We'll do this, that, and the third. But you must write down 100 of your contacts with their phone numbers, and you can't contact them at all for insurance. We're going to contact them for insurance, but you can't contact them.
Wow.
Said, wait a minute, doesn't that defeat the purpose of me being here? Like the purpose of me being here is to sell to my friends and family. They said, no, that's so easy to do. We want to make it hard for you to really go out there and make your money. So all your contact, that's when I broke out and hit this mofo with a 1 and 2. And I'm like, listen, I've been in this industry for, at that time it was like 15 years. And I said, and I'm licensed. I'm a licensed broker. I said, so, and when I said that, he kind of like backed up a little bit because he knew what he was telling me was not right. It was ethically wrong, but that's what they do. They
Yeah.
take a lot of your blood, sweat, and tears.
Especially
Upfront.
if they think that somebody's not is naive into the industry or field or just those unethical business tactics as well. So they always try to go for people that have no clue, especially in college areas where people are just trying to make ends meet and everything too, because they'll normally target those colleges as well.
Yeah, they go for the young people who don't have a lot of business savvy. you know, but I mean, common sense would tell you that's wrong. You know what I'm saying? That is just not right for someone to make you do work for them and you're not getting paid. Don't do that. No,
Exactly.
just horrible. Horrible. There are a lot of tactics. There are other types of brokerages that has that type of setup too. Northwestern is not the only one, Octavian. There are oh goodness, what's the other one? I don't want to really like put their names out there, but I'll email you some or I'll inbox you the other one
Yeah,
that
please.
that does things like that I'm not, and I don't even sell their products because of that. I don't. I don't like the way they treat their people. So yeah. Mm-mm. Yeah, just be careful of the schemes. And if you guys ever meet someone and you tell them, I need this type of policy because this is what I'm doing with my life or this is my lifestyle, and they cannot give you that policy and they sell you something totally, completely different, run, 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 run. Okay. Or if you meet a broker and all they're doing is pushing one product in front of you because, you know, that's all they know, run, run. Because there are so many different products out there that will be great and that's specific for your individual lives. It's specific towards your individual lives, you know, so go with what works well for you.
So Yolanda, how- how's the best way to use the whole life insurance to get the most benefit from it?
Mm-hmm. So the best way to utilize whole life insurance, again, it depends on what you want to do with it. Okay. So for instance, like I told you, a lot of people, they utilize it as a banking concept where they're saving money for the future. Okay. That's a good way to utilize it so that you can take money out whenever you want, so that you don't have to go to a bank, so that you can put money into your whole life policy and accumulate more interest than you will gain inside a high interest bearing savings account, you know. Um, it really, really depends on the individual, Val. It really does. So if you are looking to, say, for instance, buy a house in the future, all right, make sure, and you want a life insurance policy and you want to save your money, whole life is a good way to do that. I mean, there are other ways in doing that, but whole life is okay. It's okay, you know. You can, yeah.
Okay.
But it really just depends on your lifestyle, sis. What you want to do, how you want to utilize your policy. What do you want your policy to do for you in the future? Because remember, it's not immediate. These little internet gangsters got people thinking this is an immediate thing. You're going to get money, blah, blah. You do not make that money up front. That money is not going to be there up front. You have to let it sit and marinate and accumulate the dividends and grow. Yes.
Right.
And that's I mean, the best way to utilize your policy is the best way you see fit. Basically. I know that sounds a little bit out there, but it really is really how you want to use your policy, sis. Just know that it's almost like having a bank. It's like having a bank account and you could just take money from there. Once you accumulated the money, you could just take money out there from it without having to pay any interest or go to a bank or anything like that.
Okay.
Yep. Any other questions, y'all? I know you guys have some more questions. Oh, something I did want to talk to you guys about. Um, a lot of people, they come to me because they do not like to pay. They don't like the idea of paying for life insurance for a long period of time because it can be depressing, you know, shelling out $100 or $200 every month for the rest of your life. And you can get what is called a short pay policy where you only pay for 20 years, 30 years, 40 years in some instances, 7 years you can only pay. And your policy will be fully paid up. That means that you do not ever have to pay your policy ever again. It is paid, it's set, and you just let it sit and marinate. I love those policies. Those are short pay policies. But again, they are expensive. The shorter the pay period of your policy, the more it will cost. And some people, they do it because it's, you know, a great way to accumulate their cash faster. And it's also a great way for them to do a short-term investment that they will have for a long time. Okay. And the great thing with those, oh, something to look out on those short-term policies is that you don't want to do a short-term policy that is less than 7 years. Because if you do, the policy will mech, okay, or become what is called a modified endowment contract. And with that, that's when the government comes in and they make you pay taxes on all the dividends that you accumulated inside that policy. And you don't want the government in your policy like that, okay? So just make sure that you, if you do a short-term policy, it's something that is 7 years or more. Any
I'm sorry, say that again about 7 years and taxes.
Yeah. So if you have a policy, a short pay policy, and you pay it, say for instance, you want to pay it for 5 years, okay? The accumulated dividends, it's going to accumulate so fast that it's going to become a modified endowment contract. And that's when you have to pay taxes on the money that's sitting inside your policy. And you don't want to do that. You want your policy to grow tax-free. So it's best to have a long-term short pay policy. I'll say 7 years or more. So this way the dividends are growing at a safe rate where the government is not going to come in and ask you to pay any taxes.
Yeah.
Do you have any other questions surrounding that? Mr. James?
No, I just always worry about the tax implications and stuff. Like I'm doing stock market stuff, and I don't really understand that part either. When you take money out that you made, I'm working on that angle too. But
Yeah.
but you told me enough.
Okay, good. And that's another good thing about the life insurance proceeds. It's tax-free. You do not pay taxes on the money at all. Even when you die and your beneficiaries get the money, they're not paying taxes on that money. There's no taxes. It's tax-free wealth transfer. You know, the money that you accumulate inside the policy is tax-free. You're not paying taxes on that money. You're getting all those dividends and it's growing tax-free. Tax-free. This is another reason why people are opting to use life insurance, you know, in addition or in place of a 401k or a Roth IRA or just a regular traditional IRA. They're opting to use life insurance because they don't pay any taxes on that money at all, which is a good thing. And you withdraw your money tax-free. I mean, it's a really great way of skipping over the government or just not paying those taxes or anything like that. Yeah. Yes, you guys are so quiet. Any other questions? I know you have more questions. Ask the expert. No?
How can I set up an appointment to kind of map out what might be good for me? What do I have to do that with you?
Yes. So you can reach us at life@mwhitney.com, life@mwhitney.com. You can also call me at 833-289-2525. You can go on my website and fill out a contact form at www.m as in Mary Whitney.com. And yeah, those are the ways to contact me. You can also hit me up on social media. We're on Facebook, Instagram, TikTok now. We're everywhere.
Can you put that in the chat?
I will. I can. Eddie, can you put my contact information in the chat, please?
Yep, you put the email right there.
I appreciate you.
Yeah, I'm also sending them emails of all this info.
Oh, this is perfect. Thank you. I appreciate you, man.
Thank you.
Yep.
Is there a cost to do that, or is that
I don't
Free.
charge anybody anything. It's free
Okay.
advice, sir.
Besides time?
Is that time?
No, I'm saying time is a resource. Nothing is fully free. Just your time is what I'm saying.
Oh, yeah,
Thank you.
yeah. Because if you choose to, like, buy a product, of course you're benefiting me and I appreciate you so much. But the resources is really free. I'm here to help our people. I'm here to help us. Especially, get a good, just to be safe out there, because there's too many crazy grifters out there and scammers and people leading you astray. So if I can do my part in, rearing us to the right place, that's what I'm going to do. That's why I'm here.
Thank you.
You're welcome.
Thank you and amen to that.
Yes, sir. Yes, sir. Yes.
You're an angel, Yoli.
Oh, I appreciate you so much, Val. You have no idea. I appreciate you, sis. Thank you.
Appreciate you too.
So I try to get more people on this call, but you know how people are. They just like
Yeah.
iffy. That's all I'll say. But yeah. You plan on doing this again any other time?
No, not for a while, because I'm going away for the summer. So I'm going to be out in the streets this summer. So I'm just going to
Streets are
chill.
calling.
Yeah, I probably won't do this until like the winter or fall or winter. Yeah.
Okay. All right.
And they can also, like, I'm going to like take this video and really put it out there on some of our social media platforms, so they can actually refer to this if they have any questions, and contact us further. Speak with my assistant or myself.
Sounds good.
Yes, sir. So before we close out, guys, I just want to say, just be safe out there in those financial streets. Really, if you're, you don't have to come to me for life insurance. There are so many people out there, but if you do come this way, that will be awesome. I will take care of you.